read on ISM, all the manufacturing PMIs. We just received S&P Global a quarter of an hour ago. On the headline number for manufacturing, expecting 47.9, comes in better, 48.7. But do remember, this is the second consecutive read now under 50, although January and February were above 50, so losing a little manufacturing expansion momentum with regard to 50, of course, being that line between expansion and contraction. Prices paid. Here's a number we want to go down, but it's been awfully stubborn to the upside, expecting a number over 70. So the good news, it's under 70, 69.8. The issue is that 69.8 is still basically some of the highest levels that we've seen going all the way back to the summer of 22 when you get beyond our previous read, which was 69.4. So you've had back-to-back readings that basically are comping to mid-22. That isn't necessarily good news. And it does underscore the upswing in all the inflation metrics. The issue here is maybe these surveys aren't going to be as accurate as some of the more harder data points. Now, let's have new orders, shall we? 47.2, better than expected. That would be the third best reading of the year. And if you look at it, it would comp to January. And finally, employment. What a week for employment. We have ADP a little light yesterday. We have the big jobs report tomorrow from Bureau of Labor Statistics. And we end up with 46.5. 46.5. It is below 50, and that would be the lightest read, well, just from last month, which was 44.7. We also had construction spending, always 2 months in arrears. This is a March number, but it's down 0.5%, which means it's now exactly the same as January, where we started the year down 0.5%. To find a lower number, you have to go to September of 24. Interest rates are moving up a little bit after moving down on what was a perception of a weaker labor market and some of those claims numbers this morning. Sarah, back to you.
I think the headline is manufacturing holds up a little better than expected, even though we're still contracting with the overall. Thank you, Rick.
Yeah, but it's still under 50, unfortunately.
True. Yep. Rick Santelli, thank you. Also, the prices paid, as Rick reported, not as high as perhaps expected. We watched that as an inflation gauge. Rick also mentioned the data earlier on jobs. Very important because that's what the Fed is watching to see really when it will cut, as long as inflation behaves itself. If there's any concern in jobs numbers. We'll get the big government report tomorrow on jobs, but we did get jobless claims, guys, and they were elevated. It's worth talking about. There could be some funky factors here, and 1 week does not a trend make, but you know, when you see a number rise like this, it's worth paying attention to. They rose to 241,000 from 223,000 Americans filing for jobless claims last week, and it was well above the estimate. It was above most of economists' estimates for the number. Now, one caveat is that claims rose sharply in New York, by about 15,500. In New York City, some school workers are able to apply for benefits during winter and spring breaks, and this did coincide with the spring break.
So that happens every year, we think? Or?
Yeah, I mean, that could it could be, you know, a little more stress in the system means they are more likely to apply, right? So it's just worth watching, because if these numbers do start to remain elevated or go up, then that's what the Fed's going to pay attention to. But it was also a weird week with Easter and Passover and, you know, the breaks. But we did see some higher claims. I mean, it happened in Maryland and the D.C. area. Continuing claims also, which is a good proxy for the number of people that are continuing to receive jobless benefits, rising. That's been elevated. It also rose to 1.92 million in the week, and that was the highest since 2021. So that's, you know, worth watching as well. Also what comes out is the Challenger Gray and Crispus numbers. So it's a private survey of employment there where they also look at job cuts. And we did see a drop in that number, which was good because it was really elevated last time because of the Doge government job cuts. But I noted the commentary from that release, because they did say, while the government cuts are front and center, we saw job cuts across sectors last month. Generally, companies are citing the economy and new technology. Employers are slow to hire and limiting hiring plans as they wait and see what will happen with trade, supply chain, and consumer spending. So we're not talking about, you know, major drop-offs, but this kind of commentary, which is not surprising given the environment we're in, is worth watching. And certainly the Fed will be watching it, and we'll see what they say about it next week.
Yeah, new technology. Does that mean AI?
Yeah.
I mean,
it means AI.
Again, very early days to really get any sense as to what and how many people AI is going to replace.
But if you're in this
Initially.
if you're in this period where like cost optimization is something you can control, where you can control your own costs, and you have a solution via
No
technology
doubt. I
now.
think this is, in fact, right. The current environment, the uncertainty, the tariffs, whatever they may end up being, it's going to push companies to look for efficiencies. Now, we know they would anyway, but perhaps they move even more quickly towards trying to grab a hold of some of the tools that are going to be more and more available from the likes of a Microsoft, for example, of course.
Yeah.
I mentioned the stock of which is still is up 9% this morning, because it will present efficiencies and help them grow their margins.
It's interesting,
and without
yeah.
hiring any new people.
And maybe why the AI spending may buck this sort of cyclical trend that enterprise spending goes through when things slow down, which is companies pull back. As for what they're saying about the environment out there, I mean, Hershey, let's do Hershey.